we'll be going over IRS Form 4835, Farm Rental Income and Expenses. This is the tax form that you may be tempted to use for farm-related income. However, you should check the form instructions before proceeding. There are a couple of instances where you might use a different form or schedule instead. So the primary purpose of Form 4835 is for a landowner or a sublessor of a particular farm property who did not materially participate for self-employment tax purposes in the operation or the management of the farm. Then you would use this form to report farm rental income based on crops or livestock produced by a tenant. So there's further guidance in IRS Publication 225, Chapter 12, about what that exactly means. So we're going to review that in just one moment so that we can further define exactly what it means for active participation or material participation for a landlord. The IRS considers you to be materially participating in a property if you have an arrangement with your tenant for your participation and you meet one of the following tests. There are 4 parts to this test. In part 1, you must do at least 3 of the 4 following actions. Pay for at least half of the direct costs of producing the crop or the livestock. You can use cash or credit as long as you're financially responsible. If you furnish at least half the tools, equipment, and livestock used in the production activities. 3, if you advise or consult with your tenant on decisions like which crops to plant, type of seed or fertilizer to use, and when or at what price to sell your crops. Or 4, inspect the production activities periodically. So if you do 3 of those 4 things, you are considered to be a material participant as a landlord. Item number 2, if you regularly and frequently take an important role in making management decisions that substantially contribute to or affect the success of the enterprise. And the publication instruction examples discuss decisions about when and where to spray, when to harvest, standards to follow, how to keep records, so on and so forth. 3, you're considered to be a material participant if you work 100 hours or more in a period of time spread over 5 weeks or more in activities that are connected with agricultural production. And 4, you do things that should in totality indicate that you are materially and significantly involved in the production of farm commodities. So that is the test for determining whether or not you are an active participant or if you are a material participant in the production of farm-related income. And again, if you were a material participant, you would not use this form. You would use Schedule F on your Form 1040 to report farm income. If you're a tenant, you would not use this form. You would use Schedule F on your Form 1040 to report farm income and expenses. If you're a landowner and you received cash rent for pasture or farmland, but your rent was based on a flat charge instead of based on production, then you'll report this on Schedule E of your Form 1040 on Part 1. Finally, if you're a partner or an S corporation with rental income, then you would report this income on Form 8825. There are a couple of other exceptions. If if you meet all of the conditions listed under Schedule E, exception for certain rental real estate activities, then you're going to enter any deductible loss on Schedule E. And if you're a real estate professional and you materially participated in the operation of this activity, you may be reporting any deductible losses on Schedule E as well. But for those limited circumstances, you would have to refer to the form instructions. So now there is a section in the form instructions about qualified joint ventures. If you are married and you and your spouse each materially participated as the only members of a jointly held and operated farm rental business, and you filed a joint tax return, then you can elect to be taxed as a qualified joint venture instead of a partnership. This election doesn't necessarily change your tax liability. However, it may give each of you credits for Social Security earnings on which your retirement benefits are based, and credit for Medicare coverage without having to file a partnership tax return. So if you have more questions about whether or not to elect as a joint venture, then you should see your tax professional. So we'll go through this form really briefly. It's a one-page form. The document contains 3 pages in total, and again, the last 2 pages are specific instructions. As we get to those points, I'll point out what the instructions say for the purpose of this video. So at the very top, you'll show your name, enter your name as shown on your tax return and Social Security number. If there's an employer identification number, enter that in the appropriate box. And then right above Part 1, you'll see a line A, whether or not you actively participated in the operation of this farm. Now, we discussed material participation and the rules outlined in Publication 225. According to the instructions, active participation is a slightly different definition, and according to the instructions, you're generally considered to actively participate if you participated in making management decisions or arranging for others to provide services in a significant and bona fide sense. Management decisions that are relevant for this purpose could include things such as approving new tenants, deciding rental terms, approving capital or repair expenditures, similar decisions like that. You do not actively participate, according to the IRS, if at any time during the year your interest in the activity, to include your spouse's interest, was less than 10% by value of all interests in the activity. So if you have a 10% interest or less than 10%, then you would not be considered an active participant. So in Part 1, we'll discuss the gross farm rental income. And again, this is based on production. So you'll include amounts that were converted to cash or cash equivalents. All right, so in line 1, you'll report any income that you receive from livestock, produce, grains, crops based on production. So under both the cash and the accrual methods of accounting, you must report livestock or crop share rentals received in the year that you convert them into money. So if you produced livestock in December of 2022, but you actually, you had them ready for market, but you did not actually sell them for cash until January 23, then you would record that income in 2023. For lines 2A and 2B, cooperative distributions. If you have cooperative distributions, you'll receive a form called 1099 PATR. This is the distribution form for taxable distributions received from cooperatives. So if you don't participate in a cooperative, you probably won't see this form. But if you do, then you would enter on line A your total distributions, and then on line 2B, you would report the taxable amount. And that should be indicated on your Form 1099. For lines 3A and 3B, you would do something similar for the total agricultural program payments that you may have received. And if you don't receive payments from an agricultural program, then you can leave those blank. Under line 4, commodity credit corporation loans. So if you will report the full amount of these loans forfeited, even if you reported the loan proceeds as income. So under line 4A, you would indicate the CCC loans reported under an election. Under 4B, the amount of loans forfeited, and then line 4C, the taxable amount. And you can actually find a little bit more detail on this in the instructions for Schedule F, since Schedule F contains very similar information on reporting farm rental as Form 4835. Under line 5, you would do the same thing for crop insurance proceeds or federal crop disaster payments. In 5A, you would enter any amounts received in the tax year. 5B, the taxable amount. If you use the cash method of accounting and sustained your damage in 2022, you can elect to include certain proceeds in your 2023 income. And to do this, you would simply check the box in line 5C, and then in line, you would attach a statement to your return. For line 5D, then you would report any amounts that you previously checked from your 2021 4835. You would enter the amount that you had deferred from the previous tax year. In line 6, you'll report any income that's not shown on the previous lines. This could be federal or state gas or fuel tax credits, refunds, things of that nature. And again, Schedule F has all of these, a little bit more detail on these. So for line 7, you'll combine all of the amounts, the taxable amounts, not necessarily these amounts in these first columns, but all of the items to the right, you'll total them, you'll enter that sum in line 7, and then also on Schedule E, line 42 of your Form 1040. So we're going to go to part 2. Most of these are different types of expenses. You should have a good bookkeeper that can help you properly track each of your expenses and account for them in the appropriate category. I'll briefly go through each of these, and then I'll spend a little bit more time to cover any details that the instructions might have. So for line 8, you'll enter your car and truck expenses, and again, more detail can be found in Schedule F instructions. You'll also need to attach IRS Form 4562 to this. Under line 9, any chemicals, not necessarily fertilizer, but other chemicals that you cannot indicate elsewhere, like for example, gasoline, fuel, and oil should go in line 17. Fertilizers and lime should go under line 15. Medicines for veterinary practice would go under line 29. But chemicals that don't have a place somewhere else on part 2 would go here. In line 10, conservation expenses. This would be expenses that you incurred for soil and water conservation, erosion prevention, or endangered species recovery. They can only be deducted if they're part of or consistent with a conservation plan. approved by the Department of Agriculture, or a recovery plan approved in accordance with the Endangered Species Act of 1973. So if no plan exists, then your expenses must be consistent with a plan as approved by a state agency. This deduction cannot exceed 25% of your gross income. So the number that you put into line 10 cannot exceed 25% of the number from line 7. For line 11, any custom hire machine work, not necessarily repairs and maintenance, but you can refer to your bookkeeper's reference as to which category a questionable repair might go into. For line 12, any depreciation and section 179 expense deduction that you did not claim elsewhere. So if you filed 4562, which is a depreciation and amortization, you may have to file that, but in order to determine that, you should refer to Chapter 7 of Publication 225, which is the farm income publication, to determine whether or not you should claim that depreciation in Section 179 expense and then attach Form 4562. For line 13, you would enter any amounts that you spent on employee benefit programs other than pension and profit sharing plans as outlined in line 21. For line 14, the amount that you spent on feed, then 15, fertilizers and lime, 16, any freight or trucking costs that you incurred that were separate line items from expenses that might have been incurred for delivery of supplies. Line 17, fuel, oil, and gasoline. Line 18, insurance costs other than your health insurance. And line 19 would be interest, either in the form of mortgage that you paid to the banks or other mortgage or other interest. But you should see the instructions for IRS Form 8990 to determine how much of your interest expense you can deduct on this form. For example, in the form instructions, they indicate that a home mortgage interest versus investment interest, they're treated differently. You would have to allocate or classify your interest expense so that it is deducted in the correct line of your tax return, and that it receives the appropriate tax treatment based on your situation. So all of this to say, you should probably refer to the form instructions for either Schedule F. You could refer to the instructions for Form 8990 to determine your deductibility for interest expense. For line 20, you'll enter your labor costs minus any employment credits, for which you would have to refer to Schedule F instructions. 21, the amount that you put into pension or profit sharing plans for your employees. Line 22 would be rental costs or lease costs for in 22A, vehicles, machinery, and equipment, and then in 22B, either land or animals or other items. But in line 22A, you would enter only the business portion of your rental cost. If you leased a vehicle for at least 30 days, you may have to reduce your deduction by an inclusion amount, and you should refer to Publication 463, which is, there's a section in there, leasing a car. It gives a little bit more detail on how to go through that. The rest of these expenses from lines 23 through 29 are fairly self-explanatory. Repair and maintenance costs, seeds and plants, line 25, storing and warehousing costs, supplies that are not otherwise indicated on this form, 28, utility costs such as electricity, water, wastewater treatment. Line 29, veterinary costs, breeding costs, medical costs. And then for line 30, other expenses, you'll enter any expenses that were not previously listed. And if you're required to capitalize expenses, you should, the form instructions refer you to a section called How to Report under capitalizing costs of producing property and acquiring property for resale. So in that section, it states if you produced real or tangible personal property or acquired property for resale, certain expenses may have to be included in inventory costs or capitalized. This might include the direct cost of the property and the share of any indirect costs that are allocable to that property. So basically, if you're buying something for resale and you decide to expense it here, you should watch out because you may have to capitalize it as part of your inventory costs and you may not be allowed to directly expense it. So long story short, if you have questions about expenses that don't have a place in lines 8 through 29, before you enter that expense in line 30, you should check with either your tax professional, your bookkeeper, or at least refer to the Schedule F instructions for more detail about whether or not you can expense that, you directly expense that item, or whether you have to capitalize the cost of the item that expense was for. Assuming you have all of that information, you'll add all lines 8 through 30G, and then in here, if you basically, if you entered capitalized expenses up here, then the form instructions state all of your expenses, you'll add all of your expenses all the way through 30F, and then if you entered capitalized expenses here, you would subtract those capitalized expenses, and that results in your total expenses. So basically, if you expense something somewhere here that was capitalized, then you're going to end up backing that out when you put it into 30G. You're going to back that back out. On line 32, you'll subtract your expenses from your gross farm rental income in line 7, and then if you have income as a result of this, you'll enter it here and on line 40 of your Schedule E. If there is a loss associated to this, then you must go to line 34. And so what the instructions state is that if line 31 is more than line 7, you wouldn't enter your loss here in line 32. You must apply the at-risk rules and the passive activity loss rules before you can apply any losses against your income. And to do that, you'll need to follow the instructions for line 34 and then refer to the instructions for IRS Form 8582. And after those rules are applied, your allowable loss might be smaller than this amount here. So you still, whatever loss appears here, you have to apply both at-risk rules and passive activity loss rules to make sure that you're not deducting a loss that's already been accounted for somewhere else. So in line 34, again, you'll check this box that describes your investment. Again, if all of your investment is at risk, then you have a difference in how you have to account for them under the at-risk limitations. So if all of your investment is at risk, then you don't have to apply the at-risk rules. If in line 34B you check this, then you would have to go through IRS Form 6198, which is at-risk limitations, and then from there you would have to complete IRS Form 8582 to apply your passive activity losses. So, and then in 34C, this basically repeats what I just said. You may have to go through the passive activity loss limitation worksheet to determine your deductible loss, regardless of which box you check. But if you do check 34B, you're going to have to complete the at-risk rules form before you go on to calculate your passive activity loss. And then after you go through all of those calculations, you can then enter your deductible loss in 34C and then on Schedule E of your line 40 of your Schedule E. So if you have income, you'll immediately put that in the line 40. If you have a loss, then you'll go through a couple of extra steps to determine, first, if not all of your investment is at risk, then you'll have to go through the at-risk rules, and then you'll have to go through the passive activity loss limitations. And then through that worksheet, you'll also be carrying any previously declared passive activity losses that were disallowed from prior tax years. You'll be applying those through the rules, and whatever you determine from Form 8582 will be the number that goes in here. So, and then the remaining disallowed loss will be carried forward to the next tax year. So that's all we have for this tax form. It sounds a little bit more complicated. I think most people probably will send this to their accountant to take care of. Definitely there are some tax expertise questions that make this a little bit less than straightforward. However, we do have videos and articles on not just IRS Form 4835, but also on Form 8582, as well as Form 6198. You can read all of those articles on our website. Simply go to teachmepersonalfinance.com, type in either IRS Form 4835 if you're looking for the farm income form. If you're looking for the passive activity loss article, you would go to IRS Form 8582, and then if you're looking for the at-risk rules, you would go to IRS Form 6198. And if you like our videos, please subscribe to our YouTube channel. If you like our articles, please subscribe to our newsletter. And as always, if you have any questions, comments, or concerns, please post them either in the comment section or send me an email. Thank you very much.